Let's take a look at this subscription box e-commerce business making $10,837 per month in profit and recently listed for sale by Empire Flippers at an asking price of $422,000. That is a 39x monthly multiple. On an annual basis, that would be a 3.25x multiple. This listing was quite interesting because when I first skimmed over the listing, I'm like, okay, there's a lot here that I really like. But as I went back and reread the listing again and kind of thought about things more and looked at the numbers that they share with us here, I'm like, I don't know if I really like this one. So I'm going to go through and point out the things I like and then go back and point out the things I don't like and talk about what you should really diligence if you're interested in acquiring this business, and ultimately share with you my quick take on the business's valuation. On that note, let me know in the comments, guys, as we're going through this video, if there's anything you feel like I overlook or miss out on in ultimately, whether you like this business or not from an acquisition perspective. Okay, so let's jump into it here. First thing I have underlined, cost of goods sold as a percent of sales is 19%. That is quite healthy for an e-commerce business. And I'll also point out the profit margin too while I'm at it at 35%. That is also quite healthy for a physical product e-commerce business. Now, getting into the listing details, it says this listing is for a subscription box e-commerce business established in 2017. The trademark brand specializes in themed products featuring custom art, high-quality stationery, planners, and crafting kits. The business model is driven primarily by subscription sales. Everyone likes that. Offering various theme bundles with unique, coordinated monthly designs. The business benefits from a highly loyal subscriber base. They've got an average subscription duration of over 18 months. 60 to 70% of revenue comes from the recurring subscriptions. They've got a 3PL in place. The United States is responsible for 60% of sales, Australia 18%, Canada 6%. Those are the largest markets, so they do have a little bit coming from elsewhere. The point that I really found appealing about that is that the product is diverse globally, or the sales base is diverse globally and appeals to multiple markets. And yeah, I think that is about it, but that's not a lot, but there's a lot to like there, right? The business is making $120,000 per year. It's got healthy numbers and it's subscription based. So what don't we like here? Well, you may have noticed the things that I've got a little question mark next to. The sellers currently dedicate about 45 hours per week to the business. Two things jump out at me. A, 45 hours per week. That is a lot of time. And sellers being plural. Sellers typically understate their amount of involvement in a business. And, I don't know if understate is the right word, but certainly round it down. When you have multiple sellers, so 2 is what I'm going to assume for a business of this size, you ultimately multiply that rounding down by 2, right? So there's oftentimes a lot more work that's really not being accounted for. And then they say right here, the seller's focused on creative work that can be easily outsourced. If it can be easily outsourced, why is the seller not doing that before selling the business, right? Why are they not doing that already? If that creative work can easily be outsourced, might as well do it. And then down here it says, the business has an Etsy account generating residual sales. Basically, the Etsy account may or may not be transferable, but they've excluded the Etsy account numbers from the ultimate business valuation and the financials that they're sharing with us here, which segues me right to my next point here. And I think this is really key. Profit is declining. And my tool is... Let me exit that. Okay. Profit's declining, right? So if we look at the number right here that they share with us for February 2022, it's 32,000 for January 2022. To the most recent month, October 2025, $5,000. So it's in a substantial decline. We can get the numbers a little bit better if we come down here and we can see, the trend line on the graph. And I like that they give these numbers up front here. It's very helpful, and this is something that any potential acquirer should look at. I always like to put the numbers on a line graph so I can see it, but this with the trend line here is very, very helpful. And I appreciate that Empire Flippers gives this right off the bat. But here we can see things are in a decline. Slow and steady decline. So as a buyer of the business, you've got to make some changes. You got to be prepared to jump in and make changes to turn this trend around. Otherwise, things are going to keep going down. All right, you have to be prepared to jump in there and make the changes to turn it around. That means, in other words, that means that you just can't jump in as a buyer and keep doing more of what's already working, because this business doesn't have anything figured out that's already working. It's just existing and kind of churning things out, or churning itself out, I should say. Right? As opposed to when you buy a business that's on an uptrend, you can see, okay, hey, this is working. We just keep doing what's working. We keep doing the business as it is, and we don't have to change anything, and the business grows. All right, so this business is on a downtrend. I'll talk a lot more about that when I talk about valuation here in a moment. So ultimately, though, what would you want to diligence if you were considering acquiring this business? Because there's something here, right? Like, there's a lot to like about it. It's been around for 8 years at this point. The numbers, fundamental profitability numbers, are healthy despite the fact that revenue and profitability is declining overall. The subscription duration is quite some time, so customers that sign up are staying. There's something here, but really, what would you want to diligence, okay? First thing I would want to figure out is what the sellers actually do in this business. Like, literally, what do they do? How long is it really taking them? And then with that, could this really be outsourced? And what is the viability of outsourcing it, right? Like, how hard would it be to find somebody that has the creative ability to create the products? Maybe easy, maybe quite difficult. We don't really know, but we'd certainly want to factor that in and diligence what could be done as far as outsourcing, because if the seller themselves is doing it, it's important that you can find somebody that can continue doing it. I know I could not jump into this business and do creative work and do as well as the seller who's been running it for 8 years has done. Next thing, how much impact does Etsy have on the overall sales, right? So as the buyer, you're probably not going to be taking over. You can't plan on taking over this Etsy account, but there might be some spillover. Likely there is some spillover from Etsy, people that find it on Etsy, or maybe that originally buy on Etsy, but then come back to the website and buy directly from you in the future. If the Etsy no longer exists when you're the seller, well, you're not going to get that kind of spillover back to your website. And then the listing mentions something here about the Etsy, about the country of the Etsy account. You need to know what country it's in here. And if you could take that over. Basically, I'm just saying here's a lot to kind of unpack with this Etsy account. I didn't really give it much thought, as you can tell. And then finally, what is the cause of the decline? And I guess with that, what are you going to do to turn it around, right? Like, why was the business doing well up here and why is it not doing so well? Is it SEO related? Is there some type of platform going on here that we're unaware, some type of platform change that we're unaware of? Ultimately, what's going on here? And I think somewhere along the lines, their traffic source has just diminished because the business hasn't gone to zero, and they certainly haven't exploited their audience. They haven't been a victim of a major traffic change, but somewhere in the business model, I would guess traffic has kind of fallen off, and that is organic traffic somewhere has fallen off, and that has led to the decline in sales. On the flip side, you've got a proven product market fit here, and if you're good at advertising or organic marketing in some way, you could turn things around. So, what do I think about the valuation here? Okay, I've got a lot to say on this. They're asking a 39x monthly. I would just say a 3.25x. I like speaking in context of annual multiples. But that is based on the last 12 months' performance. All right, so as a seller, you are not going to get that. You're not going to get the past performance, you're going to get the future performance. So you have to consider, or excuse me, I think I said as a seller, as the buyer, you're not going to get that past performance, you're getting the future performance. So you have to consider the decline. And my approach is always assign a valuation multiple to the business and then multiply that by the future earnings of the business here. So let's just look at things here and say they're asking a 3.25x multiple for the business. I think that's realistic for a small subscription box e-commerce business. I think it would be higher if the seller was not so involved and if the seller was already outsourcing the creative work. And I think maybe even a 3.25x here is a little bit high considering the high seller involvement. Let's just assume that this is accurate here and the sellers are spending at least 45 hours per week in the business and maybe more. I think 3.25x is a little on the high side. I think 3x is more realistically fair. Let's just roll with 3.25x because, on the flip side, if this business did not have any seller involvement except for maybe 10 hours a week, just managing things, everything was outsourced and was bigger, it would be a 4.5x valuation business. But it's not that, and that is accounted for in the valuation. So let's just roll with the 3.25x. What is this business going to look like going forward? Let's look at where the trend line is currently here in October 2025. We can see the trend line is basically at $10,000. And I'm, talking trend line, this blue dashed line that's kind of going down slightly over time. And also look at where it was a year ago in October 2024. It's kind of hard to say where it is, but I would say that it's at about close to 14,000, maybe 13,500, but that represents about a 30% decline in profit. So if we forecast that going forward, right, rather than having an average monthly profit over the last 12 months of $10,837, what we're going to have is $10,837 times 0.7 times 12, okay, $91,000 in profit as opposed to close to $120,000 in profit. We multiply that by 3.25, the business's valuation multiple. We can see a valuation here of $295,850, quite a bit less than the asking price here once you consider the multiple assigned to the future profitability or the projected profitability of this business. So I would say here at $422,000, this business is overvalued. I think a more realistic valuation for the business here would be sub $300,000 on it. So yeah, it's a nice little business here and there's something to like, but I like it, I have to say that, but I don't like it at this $422,000 valuation. I think it is overvalued. On that note, guys, what are your thoughts on this business listing, the details, and the valuation? Let me know in the comments below. And if you found this video helpful or insightful, you know the drill. Smash that like button to help me out in the YouTube algorithm. I am calling it a wrap and signing off on that note.